So you've probably seen the news this week. The US launched military strikes on Iran. It's all over the headlines, and financial markets have been all over the place. And if you own any Bitcoin or you're thinking about it, you might be wondering, what does any of this actually mean for me? That's exactly what we're going to break down today. Not the politics, not the military strategy, just the financial picture. What's happening to Bitcoin right now, why it's reacting the way it is, and what history tells us to expect next. What's up? I'm Sats, and today we're making sense of what's going on with Bitcoin and the US-Iran conflict. Let's keep it simple. Okay, so let's quickly set the scene. Just the financial relevant parts. Over the weekend, the United States launched major military strikes on Iran, targeting missile infrastructure, naval assets, and nuclear facilities. Iran responded with missile and drone attacks across the region. It's the broadest military conflict in the Middle East in decades, and markets felt it immediately. Here's what happened in financial markets within hours. Oil prices surged. Brent crude jumped roughly 8 to 10% toward $80 a barrel. That matters because Iran sits right next to the Strait of Hormuz, the narrow shipping lane that carries about 20% of the world's oil supply. If that gets disrupted, oil prices spike globally, and higher oil means higher inflation. And higher inflation is generally bad for financial assets. Gold went up about 2%, because gold is the classic safe haven. And when the world gets scary, people buy gold. The US dollar strengthened too, which is also a typical flight to safety move. And stocks? US equity futures initially dropped more than 2% overnight, before recovering significantly when markets opened Monday morning. And Bitcoin? Bitcoin dropped to around $63,000 on the initial shock, down from around $70,000 earlier in the week. Then it bounced back towards $69,000, $70,000 by Monday. So what's going on? Why did it fall, and why did it bounce back? That's the interesting part. Here's something important to understand about Bitcoin and geopolitical events. And this is a lesson a lot of beginners learn the hard way. When something scary happens in the world, Bitcoin's first move is almost always down. Not up. Down. I know that seems backwards if you've heard Bitcoin described as digital gold or a safe haven asset, but here's why it happens. When big scary news hits, large investors, hedge funds, institutions need to raise cash fast. And Bitcoin is one of the most liquid assets on the planet. It trades 24/7. You can sell it on a Saturday afternoon when stock markets are closed. So it gets sold first, precisely because it can be sold. This is called a liquidity sell-off. It's not a statement about Bitcoin's value, it's just the mechanics of how big money moves in a crisis. The same thing happened in March 2020 when COVID hit. Bitcoin crashed alongside everything else before going on to hit all-time highs. The same thing happened in April 2024 when Iran launched missiles at Israel. Bitcoin dropped 8% over a weekend and then recovered within 48 hours. This time, Bitcoin dropped from around $70,000 to $63,000, about a 10% move. Which sounds bad, but compare that to equity futures, which were briefly down more than 2% in a single night, and gold, the actual traditional safe haven, only went up 2%. Bitcoin's relative resilience here is actually worth noting. And here's a data point I found really interesting. Bitcoin futures funding rates, which measure how much traders are paying to hold short positions, swung to negative 6%. That's a level not seen since Bitcoin was trading at $16,000 back in 2022. In plain English, the market was so panicked that people were paying a significant premium just to bet against Bitcoin. Historically, that's been a signal that the sell-off is overdone and a bounce is coming. And sure enough, it bounced. Okay, so we've covered why Bitcoin dropped. Now let's zoom out and talk about what this situation actually means for Bitcoin over the medium and long term. Because I think there's a really important story here that most coverage is missing. Think about what's happening in the countries directly affected by this conflict. When a nation goes to war, its currency usually suffers. Government spending spikes, inflation rises, and ordinary people watch their savings lose value in real time. We've seen this over and over in Venezuela, in Lebanon, in Ukraine after the Russian invasion. In every one of those situations, Bitcoin adoption spiked locally because people were looking for a way to protect their wealth outside the traditional banking system. Bitcoin doesn't care what country you're in. It doesn't care about sanctions. It doesn't require a bank account or government permission. For people in Iran right now who are watching their rial collapse, and it's been collapsing for years under sanctions, Bitcoin is one of the few tools available to preserve purchasing power. That's not speculation. That's happening right now. And there's a second angle here. This conflict is likely to push oil prices higher for a sustained period. Higher oil means higher inflation globally. And here's the thing about inflation. It's literally what Bitcoin was designed to solve. When governments print money and your dollars buy less, Hard assets with fixed supply go up in value relative to that currency. Bitcoin's supply is capped at 21 million. It cannot be inflated away. That's the whole point. So while the short-term noise is messy and volatile, and I want to be straight with you, it could get messier before it gets calmer. The underlying case for Bitcoin as a long-term store of value actually gets stronger in an environment of geopolitical instability and inflation. That's not hype. That's just logic. Let's look at what history actually shows us, because we've been here before. In April 2024, Iran launched a major drone and missile attack on Israel. Bitcoin dropped about 8% over a weekend, from 67,000 down to around 61,000. Markets panicked, and then within 48 hours it had fully recovered as it became clear the conflict was contained. In June 2025, Israel struck Iranian nuclear sites in what was called Operation Midnight Hammer. Bitcoin dropped from above 100,000 to around 103,000, a contained 6% dip. The US joined the strikes later that month. Bitcoin dipped again. Then Trump signaled a pause and Bitcoin recovered, and subsequently hit new all-time highs. The pattern is consistent. Initial shock, sell-off. Recovery as uncertainty resolves, or at least becomes better understood. Now I want to be really clear here. I am not making a price prediction. Nobody knows what happens next in this conflict or in markets. If this escalates significantly and oil disruptions become sustained, we could see more pain before recovery. I'm not going to pretend otherwise. What I will say is this. If you're a long-term holder, if you bought Bitcoin with money you don't need short-term, and you believe in what it is, history suggests that geopolitical dips have been buying opportunities, not reasons to sell. Every person who panicked and sold Bitcoin during a crisis event has regretted it. Every single one. Okay, so practical question. What should you actually do right now? And I want to be clear, I'm not a financial advisor and nothing I say is financial advice. But here's how I think about it. If you already hold Bitcoin and you're feeling nervous, zoom out. Look at the 1-year chart, the 5-year chart. Put this week in context. Short-term volatility is the price you pay for long-term returns. If the price dropping 10% in a weekend is enough to shake you out, that's worth reflecting on. Not because you're wrong to feel it, but because it probably means you've put in more than you're genuinely comfortable with. If you don't hold Bitcoin yet and you're watching this thinking it's all too unstable, consider that the instability you're seeing is exactly what Bitcoin was built for. A world where governments go to war, where oil gets weaponized, where inflation spikes, where ordinary people look for ways to protect their savings outside the traditional system. That's the thesis, and events like this week make that thesis more relevant, not less. And if you're thinking about buying, dollar cost averaging is your friend. Don't try to catch the bottom. Just buy a fixed amount on a regular schedule regardless of price. Smooth out the volatility over time. It's boring, it works. All right, let's bring it together. The US struck Iran over the weekend. Markets reacted with fear. Oil up, gold up, stocks and Bitcoin initially down. Bitcoin dropped to around 63,000 before recovering towards 69,000 by Monday. This is consistent with how Bitcoin has behaved in every previous geopolitical shock. Initial sell-off, then recovery. The long-term case for Bitcoin as a hard, fixed supply asset actually gets stronger in a world of war and inflation. And for holders, zoom out, don't panic, and make sure you're never in more than you're comfortable with. The world is complicated right now, but Bitcoin's rules haven't changed. 21 million, decentralized, unseizable. That's still the story. Thanks for watching. If this helped you understand Bitcoin better, consider subscribing. I'll see you in the next stack.